Recording is started and officially, good morning. Happy Monday. Welcome out to the Options Income Launchpad Monday Market Kickoff. It's great to see everybody. I hope you had a great weekend. Those of you who didn't have a chance to come by and hang out with us yesterday for our market posture session, we will review that here momentarily. Excuse me. Good morning, Sarah. Good to see you. Good morning, Lee. All right, let's dive in. A little bit of a sluggish Monday morning start. That's all right. That's all right. It's what we do once we get started that matters. As always, let me remind you that what we do is for education and illustrative purposes only. Nothing we do or say should be considered or construed as a recommendation to buy or sell any financial security or product, because we're not brokers or advisors and therefore don't give any kind of personalized financial advice. Any decisions made should be done so at your own risk. Okay. Yada, yada, yada. The rest is there. What are we going to talk about today? Opening futures and news. We're going to review the economic calendar for this week. What do we have today? What do we have the rest of this week? We'll review our posture. Talk about mindset for open trades. Talk about opening range and any trade implications. What does the early week opportunity list look like for us? And what is the trading plan section of the week? We have two more sections left that we're working on for this year. For 2025. And then in 2026, we're not going to just start over at the beginning. We're going to talk about prioritization. How do you evaluate your entire trading plan? And then instead of working, because you probably have at least 2 or 3, 4 sections that you're like, oh, this is quite good. I've gotten this where I want it. And you don't need to work on that as much, but you probably have a section or 2 that's a 3 or a 4. And you're thinking, I need to put some more time in on this. That's probably true. And so, I think it's a great opportunity to talk about that. So we are going to finish up. We've been working on record keeping and analytics. Next week, we'll talk about goals, all very important. And then we'll go from there. So without further ado, let's get into it. Futures are starting bullishly, though there is an interesting little set of characteristics. If you notice, right now, the S&P futures are up 0.19. The Dow only 0.12. The NASDAQ 0.34, the Russell 0.77. So there's more of that money moving into small caps, which is motivated by, at least by what we can tell, the market's expectations for a rate cut. So let's see. I am curious. Oh, I didn't see that one. Did you guys? Anyone? First of all, tell me who's in the WBD trade with me still. We all held, I believe, we talked about it on Friday. And we said, hey, we got some good news with the takeover. We couldn't really find a strong number, right? We couldn't find a good per share number, but we said, you know what? We think that there's additional room to go. Now, I want you to notice this article here. I was like, oh, I didn't notice this. Paramount makes a $108 billion hostile bid. And you might think, hostile? That doesn't sound good. Well, maybe not for some, but if you got calls on WBD for Warner Brothers, and you'll notice it's got the Netflix sticker here and Comcast, but it doesn't have WBD. So I was like, whoa, what's the implication for WBD? So we go to WBD, where you can see we started here and it got going and was looking pretty good. And then all of a sudden, Friday, some news comes, big volume, jumps up, closes at the top. Where are we now? Zoop. Set to open at 27. Well, so Steven's right. There, we talked about that. About antitrust violation if Netflix buys it. If Netflix buys it. This is new news about Paramount. What is that? Antitrust violations is the government stepping in to prevent a quote-unquote monopoly, where there's somebody getting too big and has too much influence, too much ability to manipulate markets. The U.S. government would step in. The most classic example is AT&T got broken up into 6 pieces. They called them the baby bells. Anyways. So, Steven's right, and we actually talked about that. But that new news coming out from Paramount has this thing pushing to 2763, which is up here. So another good jump. I can't remember what my target was on that. I'm going to be honest. Primary target 27. So we are going to be beyond the reason we talked about it was because the original take profit target was at 26. That's where we were. And the question was, do we take some profit now? That's a potential take profit. It's not a you should definitely take profit. It's a potential. That's why we discussed it. Now that it's going to be 65 cents above my primary target, I will probably take some off and then see if it can keep running. So, good news on that trade. Okay. Now, what else did I notice that was interesting? So many interesting things this morning. Good morning, Vladimir. Was there only one other person in WBD? I swear there was a bunch of people in WBD with us. I hope so. That was a nice one. Don is in. Good. Good. Okay. Stopped out. Oh, okay. IBM to buy Confluent for $11 billion. Confluent soars. Another merger / acquisition. How the Fed follows this week's hawkish cut is far from certain. Yeah, I think as of right now, the big thing is what's next. Like let's just jump over there. I'm in, but not enough. But of course, that's right. It's never enough when trades do what they're doing now. We're at 90%. And then for January, there's a lot less certainty. I think at that point, the market thinks it's going to be, meeting by meeting. WBD, there it is. Like we said, 27.60. It's where it opened. It's sitting at 27.54. Now, like I said, I've got some set to take some profits off right now here near the open. in case this thing drops back down to 26. And then I'd be like, oh, or 27. And then I'd say, all right, I'm going to be done with this. But if it opens and then rallies, then I'll have some that stays with it. So I should basically close everything at or above the established trade alert target at this point. Yeah, nice move. Got what we were looking for. Fed expectations come January. And you got about 20% of people who think another cut. You've got 8%, not that necessarily think it's going to drop and then come back up, but these are people who don't think it's ever going to drop. They don't think it's going to drop in December, and they don't think it's going to drop in January. Okay, so that's our Fed watch. What else? Trump says he'll sign executive order curbing state AI rules. I don't know what that means. I got to tell you, I'm not a huge fan of legislation by executive order. It's too easily undone by the next guy and then reversed, and makes it very difficult for the country to move forward under the conditions established. Traders dump big tech, load up laggards in year-end switcheroo. I don't think that's what we saw. Let's stop for a second. Let's talk about this. Market posture. This is where we are. The group number, which is sort of representative mostly of me. But I do definitely take the group into consideration. I would say I end up somewhere around the average. There may be a couple people a little higher, a couple people a little lower, some right with me. But what did we get this week? We got an increase. We got an increase in our major market score. We got an increase in our sector rotation score. We got an increase in volatility, which means what? It means that institutions feel a little less fearful, a little more confident. It means that money flow is going to the right places. The major market alignment is perfect. Sector rotation is starting to go more into a risk-on fashion with technology leading the way. Our trend scores were unchanged, but they didn't need to change. They're pretty good. It's a pretty good trend score. It's certainly showing enough bullishness for us. Then, interestingly, the AI model scoring that we have been, I can't believe how many weeks we're in now. We are on 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months, 8 weeks. We've done a little bit of calibration along the way. It calibrates itself along the way as it looks at, the scoring mechanisms and where scores could be versus what it sees. And as that 8 weeks has passed, we're very close. In fact, the AI forecast model is a 1/4 point higher than me. That came from the short-term trend score. The short-term trend score got a 1.5, which I think was a little too high. I was still a 1, and I just said, whoa, are you sure about that? It tried to go even higher. It tried to go to a 1.75. And I'm like, you gave it a 0.5 point jump on a week where there was really only minimal price action gained. And it's like, okay, yeah, you're right. David asked, what instruction did you give ChatGPT? That's a great question. The initial instruction that I gave ChatGPT was to take each of the 10 to 15 minute videos. There are 6 of them in our course information. Yeah, this is where it gets good. So if you take a look here in our courses, This is information that's important. If you take a look at our courses and you come into our market posture course, and you click on this, and do I know everybody who's completed this and when they finished it and how far along? I do. I know all of that. I keep tabs on you guys, of course. 6 lessons that represent each of our 6 components. Each video, what I did was I took each video and I transcribed it. Then I used the transcription as the instructions. Then over the first couple of weeks, I calibrated, right? Like it started off and it had its information and it was starting. And then I would be like, oh no, wait, you're overemphasizing this. You need to give this more weight, blah, blah, blah. So we had a pretty heavy amount of calibration in the first couple weeks. And then we also let it self-calibrate because I have a project with it with each component in a ongoing chat that it can reference historically what it did, what it is doing now. So it has access to that. And there it is. There is our market posture AI model that we have developed as a group, utilizing our methodologies. And this is what it's giving us now. So we both jumped. That's an interesting question. I'm sure it would be similar. Tell me which model you use. I would say if I tried a secondary model, I would go Gemini or Claude. Perplexity. Okay, Perplexity. Okay. Who built that, or whose model is that? I'm not familiar with that one. I find Claude to be very, very effective. And I've heard that Gemini has really jumped recently. But I haven't played with it in a while. Would we be able to get those transcriptions to teach our own AI? Gabe asked. Oh, that's a great question. Honestly, I just took them and you know what? Let me see if I can't put those together so that you could try to replicate the process. Though it would be difficult because it would only be the starting point. And remember that we did do a pretty heavy amount of calibration back in these early 2 or 3 weeks. Let me think about ways that I could help with that. But I love I love where everyone's mind is going, man. Right? Where it's like, oh, how consistent is that? Yeah, but it's been interesting because there's been a couple of times where we're like, what? This is crazy. And then we had to calibrate. But then when it actually gets to its score and then you ask for logic and rationale, it is, love your thought there, Gabe. I'll happily just grab those. It's easy to do. I'll grab the transcripts and send them out or post them, and let you guys have a good time. I mean, I think it sounds like a good time. Sounds like a Friday night to me. Heck yeah. Okay. But very interesting, especially, you know, when you can tell the AI has it, you can hear in its logic. I actually was pretty discriminate in asking, like, you know, is there a better analysis that we could implement that would point us to what we're trying to build here? And it actually was like, it's pretty comprehensive. You know, it's a process that's been worked on for decades at this point now, with various groups and various traders that I've worked with, and it's become what it is. Anyway, okay, let's get going. Sorry. Great questions, great ambitions. I would love to hear anyone who's doing their own experimentation what you got? Was there, did it flag? Did it say, oh, maybe you should, because, yeah, look, constant improvement. That's what we're looking for. Okay, but we are a 4. And a 4 is good. It's bullish. It's not strongly bullish. It's not a 5 or a 6, but it's we've bounced out of this little pullback we had without really dipping even into neutral territory. Now we're back here. Great. Well poised for a strong finish to the year. That's how it looks to me. Okay. Was there anything I missed in here? I don't think so, but I think we've got all the good information. Let's take a quick peek at WBD. Ooh, okay. Okay. Push on up. Moving on up. Yes. Love it. Okay. The interesting thing that I noticed was the fact that our markets are up, but our VIX was also up. I'm going to go take a quick peek at that together, then we'll get to the watch list here. Actually, no, let's go to the calendar. Let's take a quick peek there, because there's nothing today. But we do want to know what's coming. We do have a delayed job openings report. We would love to see this thing stay above 7 million. We'd love to see it tick up a little bit, but then on Wednesday, FOMC, Open Market Committee, rate decision. Then Jer Bear gives a press conference. Then on Thursday, we've got jobless claims. Then on Friday, we don't have anything. So it's really kind of a light week. Next week, we'll get the November jobs report. So it's starting to catch up. We were supposed to get this jobs report on the 5th. Now it's coming on the 16th. So still not quite 2 weeks behind, but kind of. So by the time we get to the next Fed meeting, all the delayed data from the government shutdown should be resolved and reconciled. Okay, now let's get to the watch list. And let's take a look at the SPY. SPY is flat. Started. We're 13 minutes in. Let's take a look at our opening range, and you can see that we opened and then we sold high wave doji, trying to hold on and help establish the initial 20-minute opening range. It's flat. We'll call it flat. Slightly positive. What's the problem? When I go look at the VIX is actually kind of popping a little bit. Now, on the VIX, we had an interesting discussion about, we did score the fact that we took out this low and we said this is a lower low. We gave it a 1/4 point for that. But I actually thought, you know what? There was like a weird little hiccup in here that could easily have been categorized as a lower high, and it would have given us 2 1/4 point increases. I was on the fence. I decided I was going to go with ChatGPT with the model on which way. It did not score this one. It only scored 1. And I said, okay, I'm going to go with that too. Most of the group, I believe, did that. If anybody actually raised theirs a little bit more, let me know. But yeah, this I think I was on the fence. I was almost going to do it. Now it's turning up a little bit. So what we'd like to see is this thing go up, but not get back above like 18. At the very least 20. If it gets in, if the bodies don't give up there, with the gap, it's suspicious, Gabe asked. To this morning's gap, you're saying? Yeah, it's interesting. It's definitely interesting that the futures were positive, and then there was a little bit of a fear gap. It's very minor, right? It's not a ton. I think that what whatever happens the rest of today versus do we see it foray up into this area and then roll over? I mean, I'm okay if it does. You can see that anytime we live in a VIX like this, and then if it just generally makes a little spike up here or there, if we were to define this market and say, hey, let's even take it a little further. How much do we like this? Well, if I come over now and I pull up the SPY, look what the SPY did during those conditions, right? During those conditions, the market was in a beautiful trend higher. We love those conditions, right? And it looks like we're trying to work our way back down into conditions like those. That would be fantastic, of course. But today is an anomaly to some extent. Vladimir says, Cisco, yes, our Cisco trade continues. We said we think there's more there. We got in here. Then we got a nice day, then a little pause, but it kept going, little pause kept going, and now it's still moving. Beautiful. Beautiful. We love to see that. Unfortunately, Google is not doing the same. Come on, Google. Come on, Google. Now, it's still above where we, or about where we entered. You can see we entered here. Our support level is here. It's not wrong. It's just not going right. The real, we had the same kind of a thing. It's stalled, but it looks like, hey, if this thing can turn out of this. And again, remember, we entered this one back here, and then we got a nice pop the next day, which helped give us a little bit of room, a little cushion. I'm going to give this a day or so to see if it can't make this bounce and then get going again. That'll be worth it to hold on. Am I missing any trades? Cisco, the real, Google, WBD. Any trades to speak of that I am missing? First Solar. Well, that's not on, but it's close. And I would say still close. Like it's still in the same place. Let's go through the list now. Apple. I mean, look at Apple. It looks beautiful. It's a beautiful setup. Come on down, Apple. Come on down. You're the next contestant on The Trade is Right. Beautiful setup. Can't wait. I'm licking my chops. I can smell it. It smells delicious. I can't wait to get a taste. AMKR overextended, but if it pulled back, we got something to talk about. Amazon. Amazon is in setup mode for me. Had this nasty consolidation, but the buyers were like, we're going to make a smashing push. They got a good push. It's a great push. All the way back above the 50. Now what? Now it's pulling back and holding at the 50. I'd even give it a little bit more room, but something in there, I would say, yeah, we got something interesting. APH, I'm less inclined. ASX, it needs to pull back, not jump 5%. ABGO. So we talked about ABGO, and we actually said there's a flag, and that on Friday you could have argued for the flag, even if it was just for a few days. You can see today it's up 2.5%. So if you took the flag would have paid off, would have been worth it. AXP, no. AXP's kind of going into, it had like this kind of flag, kind of break, but just didn't really get beyond that resistance level. I see that less as a flag, more as completing the V. But I would say that this marks a great window of opportunity that if it pulls back into, makes this higher low, I'm not looking at that as a low. I'm like, that was a blip. So AXP, BAC kind of doing something similar. You can see it's kind of doing something similar. Citigroup overextended. Caterpillar setting up soon, maybe. We're starting to get this pullback. So if we see a little bit of a pullback here, moving into a higher low, I think that's viable for us. Sienna, I'm kind of a no. I feel like this thing has kind of just turned sideways on for a little bit. It had a great trend for a while. CLS, kind of the same thing. Coherent, man, this thing just keeps on going. Beautiful. Credo, close. Credo's got a little bit of a cup and handle thing going on here. I would definitely look to trade a bounce out of the handle. That's definitely on my list. Cisco's still looking good today. Delta maybe starting its consolidation. Fox, a little bit overextended. First Solar, setting up. Very close to viable. Just waiting for confirmation on this one. It's very similar kind of a pattern. Good trend. Then we had this kind of a consolidation. You could call it a mini cup and handle that's on top of the 50. You could call it an ascending triangle. You might not see that one as readily. Didn't quite get to the top, but that is the thought process, right? The lows are getting higher. The highs stalled a little bit. Ascending triangle for you pattern folk. GE, no. Gold, no. GM, yes, but not until it pulls back. You can see it's been overextended, overbought for a little bit, but it's just kind of kept squeaking out a little bit higher. What are we looking for? We'd like to see maybe something like that. That would look great for a trade setup and a bounce move. Come on, Google. Come on, Google. You can do it. You know you want to go up. Goldman, overextended but strong. GTX, maybe. Howmet, not feeling it. IBM still moving. Intel had a nice strong move up. Right now it's in a little bit of a pennant formation, which is very similar to a flag formation. It just has that big candle here instead of 3 candles down like this. That's really the only difference between a flag and a pennant. Overall, same constructs, same implications. IWM. Oh, JCI may be our horse today. It's up 2%, but I've been talking about this one where I said it bounced. Valid. Then it just sort of hiccuped. And as it hiccuped and came back down, we watched the volume. There was no selling volume there. We said, hey, if this thing looks to bounce, and really was right around here that I'm like, that's my level, then we might get this hiccup trade, which we've had some phenomenal success with hiccup trades. I think you could look for this level here as your take profit and then maybe a nice little bonus higher high. I'm thinking about that for today. Looks pretty good. Johnson & Johnson, very close. There's another beautiful setup. Higher highs, higher low. Now, you can see the last time it made a move like this and then it rolled over, it did kind of go sideways for a little bit. You got to see this and think to yourself, well, when I get my signal here, I might have to wait a week before it really gets going. So build those expectations into the trade. Don't just think, oh, I'm going to get in and it's just going to immediately go the right way. It's going to be magic. Magic, I say. Maybe it does. Who am I to say? Lumentum just looks strong, but it's been so, like, it's just chopped its way up. It's like, nope, yes, no, yes, no, yes, no, yes. And then all of a sudden you're like, well, we've gone from 175 to 350, so it's doubled. Chopped around doubling. That's an interesting chart. Eli Lilly. You can see why I'm gravitating more towards Johnson & Johnson or possibly XLV itself. But I think Johnson & Johnson, that's the best looking healthcare. The rest of the group is starting to look a little weak. And I did warn you. I said, hey, if you want to know when the healthcare move starts to fizzle out, it's as soon as I start looking to trade it. Lamb Research, no. Macy's maybe on that pullback here. It's been pumping this resistance a little bit. Let's see if it drops back into this range and gives us a new trade. I'm looking for that. MasterCard's a no. Meta, maybe. Obviously, the buyers have done enough, pushing it back to here. The question is, does it fall back? Maybe get here and then turn. I could live with that. I could trade that. That would give us something to latch onto. Goldman, was that one you were in, Sandy? Glad it worked out. So Morgan's working pretty well too. Morgan and Goldman, we've kind of identified as the leaders. Bank of America, a little less. American Express. When you look at brokers, banks, and credit cards. Microsoft, no. Micron. Yeah, again, you know what? You could have made that argument. It could be making this move. You've got earnings here. That could run. That's a tough one. Not in. I blinked. Just closed. GS. Okay. Okay. Netflix down to lower lows as they try to position themselves as 800-pound gorillas. The market is not looking. We talked about this like, oh, the split. Well, the split has not helped. The stock is down about 15% since the split. I think ultimately it'll be okay. I mean, it's a big stock. I'll figure it out. NVIDIA, not yet for me. Next, not yet for me. Palantir on a pullback. This one did enough. They busted through their consolidation here. I need to see a pullback, and then I will be like, yeah, okay, this looks pretty good to me. Okay. QQQ. Qs look pretty strong. Let me get rid of these lines. And the real trying. Roku. Yeah, Roku looks interesting. Ross Stores. Need a little bit more of a pullback here before we can trade it. RTX is a no. Silver is overextended. SanDisk is trying to break its consolidation, and then I would trade the pullback for sure. Absolutely. SoFi, maybe. SPY is holding on to just being flat for the day. STX is turned, but kind of flat. Teradyne keeps on running. That's by far the best of the group. TJX, yeah. So on Friday it gave this big turn, and now you can see it's just kind of stalled. I don't know. That was a weird one. Still in TER. Nice work. Tesla. So I said Tesla's tradable. You can see it did break out, and now you can see it's in this pullback. So I would say, yeah, you've got a little window here where a trade can certainly be working out. Okay. TSM on a pullback. The VIX is holding up. You know, the fear from today, it's not a ton, but it's holding up. Wayfair trying to make a turn, but I don't know about that one. You can see WBD made a run, but it's kind of giving some back, so we'll keep an eye on this one. WDC, iffy. Walmart. Walmart is starting to pull back a little bit now. VRT. Let's take a look at VRT. I would say it's done enough to convince us that this consolidation was broken. It's got this new high that we reached. What are we looking for now? Give me a pullback, maybe to the 50. Let's see this thing unwind a little bit and then give us, that's where I'm looking. I don't want to chase into this thing that it's already made this move. You can see that's as big as anything it's given us before it consolidates. Maybe it had a little bit more in one area. Okay, real quick look through the XLs. But materials looks increasingly strong, like it broke out and now it's holding the breakout. We'll keep an eye on that. That's inflationary. Communication services looks good. It's had its breakout. As long as it pulls back and holds, we'll be good. That's fine. May not happen. There may not be bullishness in that group this week, but we'll see. XLE. Energy's kind of sideways. Financials flat today. Industrials up a little bit. Technology's looking good. Technology is what gave us an extra 1/4 of a point back in our market posture. So that's nice to see there. XLP, little bit of defensiveness possibly building up here. We don't love this. We'll keep an eye on it. Our sector rotation actually improved last week. Utilities continues to come down. Healthcare. We'll see if it holds this area or not. And XLY, Staples, we got a great V action out of Staples. A little pullback would be fine. That would be expected, but I like what I'm seeing there. A bit of a mixed bag, more bullish than not across most places. We've got some signals developing. We've got a couple that are even possibly alerting for today. So, yeah, should we expect trade alerts this week? Absolutely, of course. Trading plan wise, let's take a quick peek. We're working on analytics now, and you might think, oh man, that's a lot of math. I got a lot of things I got to do. No, all you've got to do is number 6, keep a log, keep a journal, and all of this data flows your way as a direct result. All you need to do is start to detail, how do you process it? When? How often? Do you come in monthly? Do you come in bi-weekly? Do you come in so that you can look at the numbers and say, what are the patterns that I'm finding? Where will those patterns show up? Well, as I said, if you do this log and keep all of this data here, this dashboard will flow your way. It will flow your way. You will have all of this. You will have patterns that you can see. Are my winners getting more frequent? Are they getting bigger? Are my losers getting less frequent or smaller? And there's times with the reward to risk ratio where you might think, oh, look, my winning percentage is up. But if your winning percentage is up and your reward to risk ratio drops substantially, it's going to actually have a negative impact on your expectancy. So there's times where it's like, if we don't see the whole big picture, we don't actually understand if the implications are positive or negative for us. Sandy says it's really helpful. I can't emphasize it enough. Again, the quote from a guy who's interviewed some of the most successful traders of the last 50 to 100 years. He said, show me a good record keeper and I'll show you a good trader. Why is that? Well, because you wouldn't, if you have good records and your records say that you're losing money when you do something, it's like the old joke. Guy goes to the doctor and says, Doc, it hurts when I do this. And the doctor says, well, don't do that. We need numbers. We need something that tells us that in trading, where we can be like, you keep doing that and you're not making money from it, right? I evaluate my hedges. I evaluate my different systems. Sandy says, I've seen continued improvement from 1 to 3. Oh my, it's beautiful. Yeah. And we have to see it. We have to understand it. The numbers are everything. It's a numbers game. Trading is a numbers game. So if we don't have numbers, you're driving your car with a blindfold on. You might feel okay for a minute or two, but you're going to be in a ditch soon. So there it is. That's my soapbox lecture for the day on record keeping. I have tried to make it. Someone's like, well, is there an automation? If we could automate everything in record keeping, how our lives would change for the better. But there's just no way to, you can do some automation. You can set up spreadsheets so that you can download data in batches but you eventually have to go in and code it. It doesn't, your platform doesn't know the system you're trading. You have to say, oh, this is a bounce trade. This is a hedge trade. This is a breakout trade. This is a discretionary trade. This is a, Jack the Trader's trade. If you happen to subscribe to a newsletters, you can speed it up with batch uploads where you download, but you still, even then, it's like, if you split trades, it's hard sometimes for the system to know, what am I connecting this trade to? If I unwind something, it's a good endeavor for sure. It's a very good endeavor, but just be prepared that no matter what we do, there's going to be a little bit of legwork involved. And we then have to remind ourselves that successful traders do what failing traders don't want to. They don't want to write rules. They don't want to define things. They don't want to keep records and look at it. They just want to, fly by the seat of their pants and be a trader like they've seen on TV. I don't know. Are there traders on TV? Maybe not. Maybe they just have this conception of it. But okay. Well, good start to the week. No complaints. Market posture improved. We opened up with a slight bullishness. We've got the Fed this week. I think everything looks pretty okay. We'll keep an eye on it. Sandy says, I don't want to be the wolf on Wall Street. I just want to live a little better. That's all. Very reasonable. Very, very reasonable. All right, you guys. Schedule. I'll see you in 23 hours. Tomorrow morning, we'll go through the opening bell together. Then tomorrow night, we'll have some Q&As with Glenn first, me second. So make sure you take advantage. Come in, say hello, ask your questions. Etc. Okay, well, everyone, it's great to see you guys. Have a great rest of your day. I'll see you soon, and as always, happy trading.